This is a game changer for the cryptocurrency industry, which has been trying for almost a decade to launch a product like this. On Wednesday, January 10, 2024, the U.S. Securities and Exchange Commission approved exchange-traded funds, or ETFs, that track the price of Bitcoin. The cryptocurrency industry continues to grow with innovation, and the arrival of Bitcoin ETFs is currently one of the most hottest topics. But before you jump into the trading fray, let's unravel the mysteries surrounding these intriguing financial innovations. What is a Bitcoin ETF, and how does it work? The approval of Bitcoin ETFs is regarded as a huge game changer. It provides cryptocurrency fans with a regulated and simple way to interact with Bitcoin. This improves trading for cryptocurrency users, which some third-party analysts believe could raise demand for Bitcoin while lowering entry hurdles for others through ETFs. As a result, should the right market conditions be met, this could possibly cause a notable increase in Bitcoin's price as a wave of new money enters the crypto market. There are two main ways a Bitcoin ETF can function. Number one, spot Bitcoin ETFs. Spot Bitcoin ETFs. These ETFs are backed by physical Bitcoins, which serve as the foundation for the ETF's value. The value of your ETF shares increases in line with the price of those Bitcoins. It's a useful way of investing in Bitcoin without having to deal with wallets or exchanges directly. Number two, Bitcoin Futures ETFs. Bitcoin Futures ETFs. These ETFs do not hold actual Bitcoin, but rather invest in Bitcoin future contracts. These are contracts to buy or sell Bitcoin at a future date and price. The price of these futures contracts is therefore linked to the value of the ETF shares, which reflects the price of Bitcoin in an indirect manner. Navigating the regulatory landscape. The approval and regulation of Bitcoin ETFs vary across jurisdictions. Regulation authorities, like the U.S. Securities and Exchange Commission, have a big say in whether or not Bitcoin ETFs are approved. This regulatory landscape introduces an additional layer of complexity and scrutiny for these investment instruments. Bitcoin ETFs are expected to attract huge capital. The price of Bitcoin is expected to rise significantly, according to external analysts. Some have even predicted that it may hit an astounding $1 million. They predict that a variety of factors, such as changes in supply and demand, as well as unexpected price fluctuations, will contribute to this extraordinary growth. But it's crucial to take caution and recognize that the market determines a token's price. Despite this being a potentially encouraging indication, the approval of BTC ETFs could not be sufficient to raise the price of Bitcoin to $1 million anytime soon, considering that it presently trades at about $46,000. What is the impact of Bitcoin ETF approval on altcoins? According to some third-party analysts, the approval of spot Bitcoin ETFs is expected to influence not only Bitcoin, but also the values of altcoins. In the past, a rise in Bitcoin has frequently been linked with an increase in other cryptocurrencies, while a decrease in Bitcoin might lead to a wider market downturn. But not all coin prices move in the same way. Certain altcoins may see a decrease in value when the price of BTC rises, and vice versa. In any case, it is of paramount importance to grasp that all crypto coins are different and that their prices are affected by the market supply and demand forces. Now let's discuss the advantages and disadvantages of these ETFs. Bitcoin ETFs provide traders with a number of possible advantages. Accessibility. They offer a convenient and regulated option to invest in Bitcoin through standard brokerage accounts, reducing the need to deal with cryptocurrency exchanges directly. Liquidity. Compared to directly purchasing and selling Bitcoin, ETFs typically offer more liquidity, which makes it easier to enter and exit positions. Reduced volatility. According to some analysts, ETFs may be able to control Bitcoin's notoriously volatile price swings, making it a more appealing investment for traders who are risk-averse. Diversification. Without placing all of your eggs in one Bitcoin basket, ETFs can be a smart strategy to spread out your holdings and get some exposure to the cryptocurrency market. But it's crucial to keep in mind that Bitcoin ETFs are still new, and that there could be certain dangers to take into account. Regulation. The regulatory landscape surrounding cryptocurrency ETFs is still changing, and future restrictions or changes in rules are possible. Fees. Typically, ETFs have management fees that are deducted from your returns. Counterparty risk. You might be subject to counterparty risk, meaning the entity holding the underlying assets could default, depending on the ETF structure. Conclusion. A significant turning point in the history of cryptocurrencies is being explored in relation to the approval of Bitcoin ETFs. The promise of more public adoption of cryptocurrency is brought to reality by BTC ETFs, which everyone in the cryptocurrency community captivated and closely watched this narrative. In addition, the arrival of cutting-edge cryptocurrencies such as ApeMax, which features an exclusive boost-to-earn mechanism, is changing the meme coin market by providing fresh benefits and user appeal. The effects of these events on emerging cryptocurrencies as well as Bitcoin ETFs is still a subject of much speculation and excitement in the cryptocurrency community, highlighting the market's ongoing evolution and change. As with any crypto token, from Bitcoin to altcoins, thorough research and an understanding of associated risks are crucial. The volatile nature of the crypto market, particularly new cryptocurrencies, demands careful consideration.